Diving into our material here, we begin with current liabilities. Now, I kept this slide short and sweet, right? As you can see, current liabilities are those obligations which will become due within 1 year. For example, I've got a credit card bill due in 30 days. That's within 1 year. That is a current liability. Let's say I've got a 1 year bond, and that is, what is that? 1 year. Within 1 year, due within a year. So that will be a current liability. Another portion here, maybe I've got a 10-year bond. So it's a 10-year bond. However, the portion, so I pay this off each year for 10 years. The portion that gets paid off in this year, the 1 year's worth of it, this is going to be a current liability, while the remaining 9 is a long-term liability. Just a nice thought process there. That's what we're going to be seeing for our current liabilities. Here are more examples. We've got accounts payable, right? This is when you just purchase some merchandise, purchase some inventory. Current maturities of long-term debt, just as I mentioned prior there. Dividends. So generally, if you declare dividends, you'll pay them out within a year. Would be kind of weird if you declared them many years in advance. Income taxes payable, right? You're going to pay your taxes within a year. Notes payable. These are short-term borrowings. Sales taxes payable. This is when a store collects sales tax from you, right? Let's say it's 6%. They hold that money, and it technically, it really belongs to the government. So they owe it to the government. It's a liability on the balance sheet until it's paid out to the government. Short-term obligations expected to be refinanced. Pretty straightforward, that one, right? If you've got short-term debt and you expect it to be refinanced into other short-term debt, that will still be a current liability. And lastly, unearned revenues. Generally speaking, right, you're going to earn your revenue within a year, unless you're talking construction. This is generally speaking. Generally speaking, unearned revenues, unless it really says, okay, we're not going to earn this revenue for quite some time.